Yo, what's up everyone? It's your boy Looney. Today we're talking about something that every investor goes through, and that's bad trades. The kind that sting, but more importantly, I'm going to show you exactly how I recovered using options, strategy, and mindset. Once again, no fluff, no fake wins, just what actually worked. Quick shout out to the Discord. It is free to join, and if you want trade alerts, one-on-one coaching, or the full options course on selling options, that's part of the $8 a month premium. Links are in the description, but let's talk about one of my worst setups. Now, I have sold puts heavily on Riot and Mara earlier this year, essentially acquiring shares, I'd say too early or too eagerly. And since then, they have both dumped hard. If we look at Riot and go to year to date, it is down 7%. And I was down very, very massively. I think I was down almost 20% during that massive dip we saw throughout 2025. Right here, I was down 21%, down 10,000. And majority of it came from Riot and Mara and my crypto positions. You clearly see I have 21% in Riot. That's a massive position in my portfolio. And Mara as well, I have a 8% position. And this one is still hurting right now. But I sold cash secured puts at even lower strike prices to collect premium and lower my cost basis. And then right now I am selling covered calls on the shares I already own. So this actually gives me breathing room and consistent income. So for example, I sold puts on Mara and I got acquired at the 16.42 or an average cost of 16.42. And right now I'm down 8%. So I'm still going through it. And now I am selling covered calls against it. So I have a 16 covered call and a 16.5 covered call, generating income or premium to use to perhaps sell more puts at lower costs or invest somewhere else. And you can clearly see I have $4,000 in cash. A lot of this came from selling options. If we go to my options right now, year to date, I should be up when it loads. Yep, I'm up 20%, and then realized loss or gain past month, I'm up 36%, and year to date of 55%. And this is all from selling options. This all hedges. Now, to also combat these bad trades that I made earlier this year with selling puts at pretty bad prices was call credit spread. So I saw these again were overheating, similar to earlier this year, which I ignored. I thought they would just keep going up. Instead, this time I sold a credit spread or call credit spread. And these aren't a heavy hedge, but these are a hedge. So even if Mara does drop again, I am able to have some sort of hedge or buffer. Right here, I'm only collecting $10 if my trade goes through. And I believe I have another one that's around $10 as well right here. Oh no, this is another covered call, but I do believe I have another Mara that will also generate me that hedge. Yeah, this one and this one was $11. So about $20, $21 from this hedge. So if Mara does dip, I do have that cushion. So it's not a full hedge, but it does keep things level-headed. And also, I am treating cash as a position a lot more, because before I was just whatever cash I had, I was just putting into selling puts. And that's not a terrible strategy, but you do need the time for the markets to react, whether they're going up or down. Eventually, they do change. So when I was early in the year, I thought they could just go up forever, and I hit reality. And now, since then, I've learned that having cash on the side is very important. And this way I could buy the dip selectively, adding positions that I believe in and just sticking with a system. And since then, I've also invested into Hood and doing the same strategy with SoFi and Riot. So if we look at SoFi, actually, because this is a good example, this is a position where I'm green and I'm not looking to acquire any more shares. And it's not because I don't believe in this stock, but I'm just seeing that my other positions are down, and I'd like for those to also go green, like this one. And this one is up 24%. I do see SoFi going up significantly. And even still, if it does go up, I'm not really missing out because I do have a large position in it. I have 400 shares, around 15%. I don't really want to go above that 20%, which Riot is right around that. It is at 20% or 21%. I do have one more sell put on it, so I would be okay with owning more shares. And if Riot does drop to that level, my diversity would likely be a lot less than 20%. But I'm having this cash available for anything. So we saw this volatility with the recent attacks, and since then, VIX spiked. This past week, it went up 17%. It was right around here when I was doing the call credit spreads or selling covered calls, because I had a feeling that we were running too hot. Things were getting overbought. And although I didn't expect this kind of volatility with the attacks and just a possible war breaking out, I was prepared for any kind of downside. Now, what helped me recover? Let's just look back on what helped me recover on my year to date, because I was starting off good. And then as we got into April, dipped significantly. And since then, I have been green. I'm pretty neutral right now. I'm at the 2%. I think I'm outperforming SPY, at least on the year to date basis, 1.37. And mine is 1.54. So not significantly beating SPY, but I am beating SPY. I'm pretty curious to see on a 1 year basis if I am beating it. Yeah, I'm almost double SPY in the past year. So what actually helped me recover and just beat this volatility? Because when I was down 10%, I doubt that SPY was down 10%. Now, number one is the bread and butter, selling options. You sell puts for income, calls for risk management, but I'm doing a lot more opportunistically. I'm not going all in. I am still selling puts, but at lower levels and lower cash allocations. Whereas earlier in the year, I probably would have been all in selling cash secured puts. Instead of doing one cash secured put, I'd probably do 4. And I've learned since then that cash on the side is perfect, because now I could sell puts at better strikes, get acquired at better times, and have an overall better return. And that's the number 2, is just staying liquid. Cash is super underrated. So I'm holding back when others have FOMO'd, especially like Rocket Labs. I've heard a lot of on different influencers, and I don't know much about this company, nor do I think it's a bad investment, but you can't FOMO in, or at least I don't FOMO in as much anymore. Past week, it is down 19%. And long term, this might be a good investment, but short term, there's probably a lot better. And same with HIMS and Hood. I do like these stocks, but I do feel like they're going to dip at some point. There's just too much hype around it. It's going up too significantly in my eyes. It's up 87% year to date. I don't know how much higher it could go. I mean, it can go past 100, but even still, it's not just going to be a straight upward direction. So number 3 is rolling trades. This is something I don't really go over too much, but I had to roll covered calls when needed to stay in the trade longer. Because if I kept my covered calls where they were, I would likely have to sell my shares. And that's when it was starting to pick up late April and May. My covered calls were an issue where they were getting in the money, and I had to roll them so I can give myself some space for my stocks to appreciate. And if I didn't do that, my returns would probably be a lot lower, because I'd be forced to sell my shares at prices that I don't really think is a good time to sell. Number 4 is focusing on conviction plays. I stopped chasing random positions, and now I'm staying focused on 3 to 4. I'm trying to stay under 10 really big names. So I have Riot, you have Mara, I have Hood. Those are my 3. And then you have SoFi, that's 4. And then obviously I have some crypto, but even crypto, I am staying as just top 3. Ethereum, Bitcoin, Doge. I actually sold a position of Bitcoin Cash And I think Ave was another one that I sold. And I didn't sell at the best time, if I'm being honest, but in actuality, I only missed out on like $50. So not really missing out too much, but that's really my strategy, is just keeping my diversity a lot lower now. Number 5 is not panic selling. It would have been very easy for me to just sell here because everyone else was selling. And that's how you turn paper losses into permanent ones. So I didn't sell, I just had held. And I know a lot of other people that were in worse scenarios with like Robinhood or HIM's very risky stocks, just like my portfolio. I was down 20% at one point. And yes, it was very scary. I knew the process, I knew the plan, and I knew that I just kind of went all in a little too eager. I thought the market was just going to have a run, and I just guessed wrong. So that's how it goes. And fast forward to today, those trades that I learned from are either actually profitable now, like Riot, right? I am green finally, but before I was down significantly. I'm up 5%, not a lot, but if not that, they are recovering fast. And more importantly, I've become a more disciplined trader. That's the real win. Obviously, money, I like that is a good win to have my portfolio would go up, but lessons learned is also a real win as well. And if you've been through a bad trade and bounced back, drop it in the comments. What did you do? And if you want real-time trade ideas or coaching, hop in the Discord, stay patient, stay smart, and turn those losses into lessons. Peace.